following is an update and technical analysis on Eli Lilly, a company of the healthcare sector and drug manufacturers based upon the daily interval, where I had last covered the beginning of 2023 back in February. We had a beautiful short trade setup based upon a nice clean divergent high at a minor reactionary uptrend line, and that was good for a double-digit crash to the downside, reflecting upon a primary reactionary uptrend line. Noted as a great double-digit crash when Mounjaro quarterly drug sales missed the estimates and ushered a big day trade right off that primary reactionary uptrend line, correlated with the 319.69 price support. And this is where we covered. You opened up the position based upon big divergences that we had constructing on multiple indicators in this bearish rising wedge pattern, coinciding with this breakdown of this minor reactionary uptrend line, put in that beautiful sell signal at a primary reactionary downtrend line that correlated with that inflection point, and was off to the races in a big move to the downside. It completely snapped the neckline off this head and classic looking shoulder top, and was off to the races in a big waterfall sell-off event where day traders, long traders, technical traders ended up recovering and defending heavily that dual price support level. And it has been off to the races since. It has been a huge 100% rally right off that key inflection point to its near all-time highs there. And it has been a surge lately, a rip-roaring rally, one of the propelled by promising trial outcomes for its Alzheimer's drug and advancements in its obesity, a drug pipeline hailed as the King Kong of weight loss drugs. It has now become the second largest U.S. market cap pharmaceutical company after Johnson & Johnson, and Eli's trajectory, in my opinion, raises questions about the potential strength and side effects of the three-hit model of Mounjaro compared to the single agonist mechanism of Ozempic. And I believe we've reached a critical inflection point based upon the technical dimensional aspects of the stock. And upon zooming you in, one of the most notable inflection points for me was this beautiful falling three-method pattern where you have a very pronounced rejection, nice clean red candle close, followed by 3 days of rallying, never to exceed that previous side, and then followed by a very strong rejection there. That is beautiful as a bearish falling three-method candlestick pattern as you can possibly get, in one of the most aesthetically pleasing looking continuation patterns, bearish continuation patterns that I have seen in quite some time there. And that has superseded with great volume at price indication around this range, huge volume profile, and additional with what I see a continuation pattern of a head and shoulder classic looking top here with a neckline split. And this is what I see now. We have a bearish rising wedge pattern coinciding with a beautiful divergent high with negative and bearish divergences really constructed amongst multiple technical indicators there, the moving average convergence and oscillator, with confirmed bearish crossovers and all the technical structures of the momentum indicators. And we are about to retest and or test those zero line thresholds. We are trading upon this primary minor reactionary uptrend line based upon the March reactionary lows, and that is a very key inflection point that has been really defended by bull traders and or long traders heavily each and every time it has been inflected upon that key inflection point, correlated with its 50 exponential and 50-day moving average, called a dual line price support. And I am looking for a complete breakdown, solid red candle close breakdown below, ushering in a split, an undercut of the neckline of the head and shoulder top, which would usher in a daily time interval sell signal, in my opinion, for a risk-reward ratio, great risk-reward short trade setup to the downside, down to the top of the reactionary gap price support at 503.03 price support, which will more than likely be in confluence with the 200 exponential moving average for a 14.6% crash, down to 455.66 on a complete backfill of the gap for a 23.2% crash. And I believe if this stock will come with extreme volatility in each direction. There will be a ton of buyers that go in, scoop up, and try to defend this stock pretty heavily. It's one of the most popular stocks that we've seen in quite some time. And I have an additional brand new, if we undercut and things were to get extremely bad, down to the primary big major price support primary uptrend line based upon, call it multi-year, off based upon the January 2021 reactionary lows in December. And that has been defended exceedingly well throughout that entire span of time, if and when we come back to it as a magnet for 32.6% crash. As of now, I'm not taking a position until I see a nice complete undercut of the 50-day, 50 exponential and primary uptrend line, only increasing the odds for more downside to come in what could be the beginning stages, foundation of taking out the neckline on a classic head and shoulder top in an out of the blue, all-out rug pull, triggering widespread panic amongst long traders, where the ape community scrambles for the emergency exits in a chaotic exodus.